I'm Vivian Joy here for another Natter That Matters. And today I have the lovely Philippa Scobie with me. Hello, Philippa.
Hello.
I just asked about her flowers, if they're real, and of course they are real because we can see
they are.
whether they're growing in the garden, whether they go together. So I've invited Philippa here to talk about profit first. Now, obviously, we all need profit, don't we? But this is a specific way of accounting. And do you know what? I mean, I've been running mentoring, coaching, and training sessions for business owners for years. And the one they always avoid is the figures and the numbers. So you probably have this where people, oh, no, it's okay. I kind of know.
Yeah.
I think I know. I need a separate bank account, that kind of stuff. So tell me about yourself. How did you get into this, Philippa? What's your background?
So I live in Bedfordshire with a couple of kids, married, and I set this business up 2 or 3 years ago now after selling an accountancy practice, and my background is in tax and accounting, and I worked in corporate jobs previous to that. But I guess I got a bit sad with our business because the accountancy practice anyway, because what I was finding was I would sit down with solopreneurs and small business owners, all micro businesses like we are, and I would come to the end of the year and I'd sit down and go, here's your tax return, here's your personal tax return, and they'd be like, oh yeah, thanks very much, and you'd walk through it and their eyes would glaze over and you know exactly what's going on in their head. They're not listening, they're trying to, but it's not going in, and you deliver the bombshell. Here's your tax bill, and you can see, what? I didn't make any money, I don't know what you're talking about, you've got it wrong. And I'm like, all right, no fair comment, let's go through it together. No, you definitely do owe the tax. And it wasn't very nice news to give. And the other thing is, most obviously sole traders are on the 5th of April year end, and all the tax returns have to be in January. So a lot of the time I was giving this nasty message around Christmas time. Like the anti-Father Christmas. And
but, yeah. Always apologetic. I'm like, it's not your fault. I'm earning lots of money.
We can't have turkey this year because here's your tax bill, kind of thing. And it was that sort of feeling sometimes. I was like, this isn't much fun. And what was going wrong was they just didn't have the understanding that cash in the bank and profits, on the accounts are two different beasts. They're different things. And it's obvious when you're an accountant because you learn it and you do it every day. And it's obvious when you got it wrong and you've come off on the wrong side of it because you try to learn pretty quickly how to rectify that next time. But if you're new in business and you haven't actually experienced that yet, it's mind-boggling. It's completely baffling. It's like, how could I have profit when I've got no money in the bank? And the short answer is usually you spent it all, unfortunately. And they're like, I haven't, I've hardly had anything. And it's like, you must have. And it's really hard you hustle in your business, you're focusing on that top line all the time, and that's what you've got to do, obviously. But you take your eye on the ball of just taking 50 quid there and 100 quid there, and I'll just use my business card for that meal. And these things all add up, and before you know it, you've got no money left, but you've got a tax bill, and that's never fun. So that was my journey into profit first. And I was sort of thinking to myself, there's got to be, I know the answer is cash flow forecasting, budgeting, knowing your numbers. I know all that, but that's not so easy to implement when you are working on your own as a solopreneur type thing, and you're trying to be the marketing person and the HR person and the sales person and the operations. You're doing all these things. You're not going to necessarily sit there and do a beautiful budget and fully understand it and stick to it and be all hunky-dory at the end of the year. I think life happens and plans go out the window. It's like there must be an easier thing I can sort of teach people that they can almost do that works with with our human habits, so that it's not difficult. It's kind of like losing weight, I suppose. Like personal trainers will try and get you to walk more steps every day, or they try and do things that work with your lifestyle. This is kind of like what I was trying to think, what could business owners do that's not too much of a change for them, but will make a big difference at the end of the year.
I think profit is, I mean, profit, I work with obviously a lot of business owners, and turnover and profit, for some reason, they don't seem to understand the differences between that. And I look back, my first ever business was 2002, so God, I'm old, and it was one of the dot-com revolutions. And I actually think, I look back at that, and my first year I did $250,000 turnover and had no money. And I remember I had a guy who was an accountant there, Nick, and I remember saying, how come that you're telling me I've turned over $250,000, I've got no money? And when I started to really look, this was how I understood profit right from the painful, personal experience. It was like, well, because actually I was selling a product, and actually what I hadn't accounted for was all of the fixed expenditure. I was thinking, well, I buy it for £1, sell it for £2, I make £1. No, you don't, Vivian. You have to pay yourself. You've got your buildings and rent and all the stuff that went with it. So it was a real harsh reality, and of course one that I was glad I'd looked at, because most people don't. They just trust their accountant, they tell them what they have to pay, and they carry on, and they don't adjust anything. So luckily I was really fortunate that I said, well, hang on a minute, and he said, you need to make more profit, so that if you buy it for £1, you need to sell it.
You ask the right questions, you get the right answers. Absolutely. But it's knowing to ask those questions. That's often the issue.
Or accepting it. Such a lot of business owners, and women specifically, seem to be really bad. Just accept that they haven't got any money. As long as they can still buy some clothes, buy a holiday for the kids, and all that sort of stuff, they just carry on.
Exactly right. Until you get that bombshell of,
it's a tax bill.
Yeah, and that's usually the thing.
So profit first is a real thing, isn't it? So it's not just a few. It's a real process. So tell us about profit first. What is it? How does it all operate?
So it's a book. It's essentially a book. It's been around, I don't know, say it 10 plus years now. I think it's been a while. Written by a guy called Mike McAllowitz in the United States. And his story was essentially, a bit like what you just said. He built a huge multi-million-dollar business and went a bit wild. He sold it for like 80 figures. He was like, I made it, I'm loaded. He bought like a new house, a load of cars, and he was like, I can do this, I've made the money, I'm cool. And then it just went, and he started angel investing into other business, thinking he could afford it, and none of those came off. And suddenly he was like, had to go home, tail between his legs, because everything, his wife called and they're repossessing the cars. And it was like, for him, it was like the most exaggerated tale of riches to rags sort of thing. And it's all because he just didn't understand what had happened with his money. He just thought he'd made it, and that was that. So he was then like, well, I need to be smarter. And I think he got very depressed for a while, and he went on a journey of trying to figure out how, again, he could make his money back, and he did it again. But he's like, how can I do it differently this time? And that's how Profit First was born. And the concept of Profit First, if you've not read the book, is super simple. It definitely is not rocket science. And even Mike would say that. But it's one of those things that's really simple, but do you do it? No. So losing weight's really simple. Eat less, exercise more, but do we do it? No. Not always, not consistently anyway, necessarily. And that's the thing with Profit First. So he said, it's the concept at its absolute base is bank accounts, different bank accounts. So you have, and a lot of people will do this anyway, because it's common sense. You have a bank account, say, for tax, because that's coming and you put it aside. But what a lot of people do is they put their money in the tax when money's good, and then when it gets a bit tight, they just borrow it back from the tax account.
Not gonna lie, I've been that person. Yes, have been.
You'll make it back another day.
Yeah.
And then the day doesn't come, you still got the tax bill, remember, because that was what was happening a year ago, not what's happening now. And that's the problem with tax. It's always in arrears. It's always like, you had a good year last year, but you've got to pay the tax this year when money might not be so abundant. So he was very much like, I'm going to take this separate account for tax another step further. And he advocates having 5 accounts. He advocates having an income account, an operating expenses account, an owner's pay account, a tax account, and which one I've forgotten, profit account.
Oh yeah, profit savings, I suppose.
And the big thing here is that he sort of bangs on about, and again it seems counterintuitive, is that you pay yourself first, and we don't do that. Well, historically we don't do that.
But quite a lot of business owners don't. Yes.
Yeah. And we look at the profit view. If you can imagine in your head what a profit and loss statement looks like, it's sales, it's cost of sales, it's gross profit, then it's overheads, and then it's net profit. So that's how it's laid out, and that's how we sort of treat our money as well. So the sales comes in the top, We spend what we need to spend, and like this is like the order of where our money goes. We spend what we need to spend on materials and subcontractors and things like that, and then we pay the rent, and then we pay the freelancers, and then we're doing that, and then if there's anything left at the bottom, we pay ourselves. And he's like, that is wrong. Don't do that. You didn't start a business to take the scraps. You started a business, obviously, you know, for many reasons, but one of them was to actually make money and pay the bills and contribute to the household. So make that a reality. So hence the name Profit First. You take your profit out first, but you reverse engineer the rest. So there's a bit of science up front. Depending on the size of your business, and by the size of the business, I mean like the level of turnover. He says, you know, percentage of your income, there are set percentages that how you should treat your income. So if you're a small business, under $500,000 turnover, 50% of your income should go to you as the owner. Which sounds nice. Doesn't happen much in reality, but you know, this is if you go with a system, this is what happens. So you take your 50%, and then you take 30% for your overheads, 15% goes off to the tax man, and you work like that. So you very much have sort of set percentages around things going. Whatever's left goes into a profit pot. And a profit pot is like a rainy day fund. It's your bonus for being an amazing business owner, and once a quarter you do with it, you take a distribution or you plow it back into the business, you do what you want with it. But the key is you get paid, and you get paid 50%, because and if you think that's baking your profit margin in straight away, it's saying straight away, I am allowing I am only doing this business if it makes 50% profit, which for a service-based business is totally doable.
Oh, absolutely. I mean, I'm a very high profit business because I'm all service. My cost base is very, very low. Taxman loves me. And that was the lesson I learned from my first business, which was a product-based transactional business, was actually, I'm never going to be able to earn as much because I'm still reliant on that product source. So it's quite an interesting one. The thing I get asked most, and I'm just going to pick your brains while I can, I know we didn't talk about me asking you this, is the VAT. Like, so a lot of businesses go along beautifully, and then I'll meet them, I'll go, hang on a minute, you should be registered for VAT if you're turning over that. And you must see it out there as well.
All the time, yeah.
And the most people that I get come to me for coaching for their business is, how do I go from here to then here? How do I get over that barrier? So what are your top tips for getting over that kind of VAT charging?
My top tip is you accept from day one that VAT is not your money.
Right, yeah, okay.
So when we go back to the Profit First example, we had the sales, and then I kind of missed a step when I was explaining to you the 50%, 30% thing. You actually only do the percentage allocation based on what Mike calls real revenue. And real revenue, in layman's terms or in another way of speaking, is gross profit.
Right, okay.
But we're talking cash here. We're not talking accounts, we're talking profit. But if you think like that, so sales, turnover minus cost of goods sold is your real revenue. That's what you're allocating out, 50% to you. Okay. So going back to your products business, that number was probably quite small, that real revenue, but you still took 50% of it as owner's pay, if that makes sense. And 15% still went off to the tax man and all the rest of it. VAT, I literally say, from a cash perspective, you treat it like a cost of goods sold.
Yeah.
You strip it out, you don't even consider it, because the minute you consider it, and obviously the book was written in America and they don't have VAT, they have sales tax, and it works different to the European system. So this is my own modification on it, that Mike's okay with, because I've talked to him about it. But basically it trips people up all the time, and there's that quarterly panic of, where the hell am I going to find the VAT money from? And then you steal from the different pots. That's what happens then. You go, oh, but that's tax, I can take that from the tax account. It isn't tax. I'm going to say now, VAT is not tax. It's a cost of goods sold in cash terms. That's the way you have to think about it. You didn't make that money. It belongs to the tax man. Forget about it. Don't bring it in. It does not fall.
Business owners don't think of it like that from the beginning. So they start off with just humble kind of, Etsy sales, or a bit of service here, or a bit of this and a bit of that. And then they start working with a coach normally, or they find a way to earn more. And before they know it, they're up to kind of 5-6 grand a month. And it's like, well, hang on, you need to start looking at this now. This is a proper bit, this is a very different energy than you.
The other thing I would sort of, because I get asked about VAT a lot as well, and there's obviously the pricing conundrum. when you get VAT registered, it's like, oh great, I've got to put my prices up 20% just to get back to where I was, and that's the reality, isn't it? That's horrible. But I actually suggest that if you're serious about your business and you see this going, you know, over the VAT threshold, be VAT registered from day one, because your pricing won't need to change. Does that make sense?
Yeah, absolutely. Yeah,
you can be VAT registered from day one. You know, it's the added bonus as well of looking bigger than you are in the early days, which can't do you any harm. And it scares people. I get it. The compliance, the am I getting it right? You know, having to pay out every quarter is an extra admin, an extra burden. But it's also really tough once you've got a very dedicated client base. And if your client base are individuals, not businesses, it's tough to put your prices up 20%.
All businesses are VAT registered, so it's the same in essence. Yeah, or you take the hit.
A lot of people take the hit because they can't face it. Wow, that's terrible. You know, you've suddenly gone down. You've knocked 20% off your profit margin.
Absolutely, yeah, yeah. Launch new programs is the answer. That's all I can say. So thank you for that, Philippa. So how can people get in touch with you if they've got questions, or if you've got any information you can provide? You know, how do you start with helping people? How does it work?
Yeah, so I'm like a registered Profit First professional, which means I'm licensed to people through Profit First if they want to. A lot of coaches will talk about Profit First because they've read the book, but as you can probably gather, there's a lot of nuances depending on the type of your business or geographically where you're located. Obviously, you guys are all in the UK. But there are a lot of nuances, and a lot of people have maybe debts and stuff like that they want to deal with, and you kind of need a bit more of advanced techniques around Profit First there. So my firm, Financial Foundations, is licensed to help with that. And I have a couple of ways that you can work with me. I've got some resources on my website that you can go and have a look at.
I'll put links into this, so if you're watching this, look at the link underneath.
Okay, cool. But the best thing would be just to reach out to me. I think you can book a discovery call. I know you can book a discovery call from my website. And I can just tell you quite quickly when a Profit First would work for your business. I mean, it works for pretty much all businesses that are making money. And then that sounds funny. If it's a startup business, you might want to wait a while, but there's nothing to stop you from getting the habits in place and getting the bank account set up. And then typically, if you want to work with me, I do like a 90-day implementation. So it's a tailored program for you, and we just implement it together.
Sounds lovely. Wonderful. Well, hopefully you'll be able to help someone who's going, yeah, I get it. Because I think that growth period, people don't think about this because they don't want it, because it's all exciting and they've got new clients, new products, and they're filling things and selling things and, you know, expanding things, their social media, you know, following. They don't think about this part, and then it's a bit of a...
This is the problem, isn't it? You grow like that. So this is your sales, you go like that. But if you're human, your expenses tend to go like that as well, because you start throwing money at the problems because you've got money. So you start going, here, help me. But there is no science behind it. So you get in this horrible graph where the margins just get squeezed. And before you know it, you're like, I'm earning less than I'm the lowest paid employee in this business. How did that happen? Like, seriously. And that's the danger. You know, you could have a stonking turnover, but actually, what are you making from it? Probably minimum wage if you're lucky. So that's what we want to avoid, because that's not fun.
Thank you very much. And so if you want some more information on how this works, well, I'm sure we can buy a book for a start, or actually get it definitely. And straight from the horse's mouth, as it were. So
well, now there's I think I can't remember what it's called, the Money Monsters or something. He's written a book for kids.
Oh, okay.
So that's quite interesting.
Of all the things we should learn at school, that should be one. I don't know if they do. They didn't. I'm 49. They didn't do it when I was at school. But what was it? I learned to cook a shepherd's pie when I was at school.
Exactly.
And he said at all, but money management and earning money, how to kind of budget and stuff like that. So I don't know if they do it at schools now, but they definitely should do. So that's good news.
I agree.
Thank you very much. And obviously, if I got anybody that needs you, I will send them your way. And thank you for spending your time with me today.
That's great. Thanks so much. Bye.